Welcome to another tutorial on business analytics in Excel and using Excel QM. In this tutorial, I'm going to talk about how to perform a break-even point analysis in Excel QM. Let's review the concept of break-even point analysis for a moment. Break-even point is amount of item to sell so that the revenue is equal to cost. We neither gain profit and nor we are in loss. So at break-even point, profit is zero. There is no profit at this point. Revenue equals to total cost of producing and selling the product. The business covers all costs. There is no loss and no gain. So when we talk about the cost, we know that the cost of producing material and the cost in business includes fixed cost and variable cost. Fixed cost includes all the costs that do not change with the number of items that we are selling. They are fixed, such as rent, salaries of the laborers, insurance. However, variable cost changes with the number of items that we sell, such as the raw material for producing each product, labor per unit. So we can define the fixed cost. If you are going to show it on the graph, this is our fixed cost. No matter if we don't produce anything, we still need to spend money as an initial investment. And as we produce and sell more product, then that would be the variable cost per item. So the total cost is the fixed cost plus variable cost. When we talk about revenue, revenue comes with the number of items that we are selling multiplied by the price of that item. So if we sell 0 item, we have 0 revenue, and as we sell more item, the money comes in. So we have the revenue line here. So the intersection of the cost and revenue is called break-even point, the place that both revenue and total cost are equal and there is no profit there. Let's look at the profit size. Profit is calculated by subtracting the expenses or total cost from the revenue. When we say at break-even point profit is 0, it means that revenue and total cost are same. So revenue is coming from selling price per unit multiplied by number of units sold. Total cost is the combination of fixed cost and variable cost. Fixed cost is something that is not dependent to items sold, but variable cost is the variable cost per item multiplied by the number of items that is being sold. Let's assume that S is the selling price, F is the fixed cost, V is the variable cost per unit, and X is the number of units that is being sold. So profit is the revenue, which is selling price multiplied by the number of units sold minus the total cost. That would be fixed cost plus variable cost. V, variable cost per unit multiplied by the number of items that is being sold. So at BEP, total cost is equal to total revenue. In another word, profit is 0. So I can substitute this profit with the function that we have. Profit equals to SX minus total cost, including fixed and variable cost, equal to 0. Therefore, SX equals to F plus VX. If I solve this equation for X, then I can find the BEP break-even point or the number of items that the business should sell so that the business can cover all the cost. In another word, break-even point is equal to fixed cost divided by selling price S minus variable cost per unit. In the break-even point analysis, we can solve the equation for X and find the break-even point in terms of number of items that can be sold. And also we can solve the equation for S and find the price of the item that we need to sell, the price in which the item should be sold. In another word, if we know how many items we are going to sell, then how much each item should be sold so that we meet the total cost. Now let's look at an example in the Excel and Excel QM. So we have a company that sell old clocks. Rebuilt Spring sells for $8 per unit. So they will sell their product for $8 per unit. So selling price or S is 8. Fixed cost of equipment is $1,000. So F is $1,000. Variable cost for the raw material is $3 per unit. So V is $3 per unit. We are looking to see how much of this spring should be sold so that the total cost is covered. Go to the QM in the Excel, click on the QM menu, break-even analysis, break-even analysis. I'm going to name the spreadsheet. Let's go with the BEP analysis. Make sure that you click on the volume analysis and graph also. When you click OK, you should be able to see a predefined organized worksheet that allows you to just put your input and it automatically calculates everything for you. So in our example, S or the selling price is 8, variable cost is 3, fixed cost is 1,000. So fixed cost, let's fill in the blank here. Fixed cost is 1,000, variable cost is $3, and selling price is $8. So now if you look at the graph, it tells you where the revenue and cost meets. The break-even point is at 200 units. You can find the break-even point information here. I'm going to click on the $200. Look at up here. The function that we already showed in the slide is formulated here, and it basically automatically calculates for you everything for you. With the 200 unit, the total cost would be $1,600. That includes 1,000 fixed cost plus 200 multiplied by 3, which is 600. 1,000 plus 600, that would be 1,600. This is the break-even point you can get easily, and you also can get the break-even or cost volume analysis through the graph. Something that we are also interested is knowing break-even point in terms of the price. So the idea is if I can sell some amount of product like 250 product instead of 200, how much should I price them so that the revenue meets the cost? I can cover all the cost. So if I put 250 as the optional volume, you can see that the total cost would be 1,750. So the price that we are going to put, or another word I'm going to put it here, equals to the total cost of selling 250 divided by 250 item. That gives me the selling price amount if I want to meet my cost. So $7. Now look at here. If I, instead of $8, put $7 here, then the total cost and the total revenue will meet each other. And they are equal, so the profit is 0. And with the $7 price, by selling 250 items, we are meeting the costs. So again, two things you're going to calculate using break-even point analysis. First thing, calculating number of items should be sold if we have the variable cost and revenue, and also calculating the price of the items if you know how much you're selling, how many items you're selling.